Right, welcome back. We've got this Forbes article, and it's about a value investor. Really seasoned guy, and the thing is, he's super bullish on Bitcoin.
Yeah, definitely interesting. I mean, when you think about value investing, it's all about long-term potential, right? Like the Warren Buffett approach. And then you have Bitcoin. Well, it's known for its volatility.
Exactly, and this isn't just some, dabbling in crypto. This guy, he's a CFA, a stock analyst, been around the block. He's actually weaving Bitcoin into his long-term financial plans. He even predicts it'll hit $1 million by 2030.
Wow. Yeah, you have to look at his background, though. The dot-com bubble, he got hit pretty hard, with those hyped-up tech stocks. So he learned a lot from that, and it really solidified his focus on intrinsic value, staying away from all the market frenzy.
I was reading that early in his career, his stock picks were all about buying $1 for 50 cents, which is essentially value investing in a nutshell. But how do you apply that to Bitcoin? It doesn't have physical backing, no traditional audience reports. So where do you even start?
Well, that's where this gets interesting. He actually compares Bitcoin to gold. He argues that both have value because of their perceived scarcity and that they've been accepted as stores of value historically. But then, gold itself doesn't have a ton of intrinsic use.
Most of it's just jewelry and bullion.
Right, exactly. It's more about the history, the cultural meaning behind gold. That's what drives its value, even if it seems kind of intangible. And this investor says Bitcoin is tapping into that same thing, but in a digital way. He sees it as like digital gold.
For the digital age.
Yeah, for a generation that's just more comfortable with digital assets.
There's a big emphasis in the article on this generational shift and how we see value. There's this story about his son, who's totally a digital native, asking him about Bitcoin. And that simple quotient really made the investor realize just how differently younger people view, the whole world of finance.
It's like his son was introducing him to a whole different system of value. Remember that part where the son was bragging about his friend's dad's making money from Bitcoin? It just shows how much digital assets are part of their world, their understanding of finance.
And his son would rather save in a Bitcoin trust than in actual cash, which says a lot. It's really interesting, this investor with his strong value investing background trying to reconcile his beliefs with what his kids are thinking.
It's not about dismissing their views as like, oh, they're just young and speculating or being risky. It's about understanding, what's shaping their financial outlook. What seems out there today could be totally normal tomorrow. I like that part where he talks about his analog upbringing compared to his son, who's just fluent in digital. It shows the gap between how they each see value.
This whole clash between the traditional and the digital, it's at the heart of it all, how his outlook is changing. He's not ditching his value investing principles, but he's adapting them to a world where physical and digital are kind of blending together.
Yeah, and the gold analogy comes back in there too. He talks about his father's gold chain, the one that got passed down to his son. It's a tangible thing, passing value down.
But it also makes you think, even gold, which feels so timeless, it gets its value from what we believe, from cultural stories.
Right, and he sees his son looking at Bitcoin the same way, like a digital inheritance, something valuable that can last through generations.
It's a really interesting way to look at it, but I do wonder, is this shift to digital assets creating a divide between people who grew up with tangible assets and those digital natives?
It's definitely possible, but maybe instead of a divide, it's a chance for discussion, for understanding each other better. Like this investor, he shows us how important it is to be open to new ideas, even if they challenge everything we thought we knew.
So how does someone like him, a solid value investor, go from calling Bitcoin junk to thinking of it as this potential digital gold?
Well, the turning point seemed to be he realized that the number of cryptocurrencies, there are just too many. It has to shrink for the market to really mature. He thinks just a few will make it, probably Bitcoin and Ethereum, just like gold and silver are the big players in precious metals. That, and seeing how his kids view value, that seems to have really changed his thinking.
He's definitely not ignoring the risks, though. The crypto market can be pretty wild. The article mentions his advice, that classic line, invest only what you can afford to lose.
Yeah, for sure. It just shows that even experienced investors know crypto can be volatile and unpredictable. He's not saying go all in, more like think long-term, be careful, especially if you're making it part of your financial plan.
And he's not just picking randomly. He likes Bitcoin specifically because of how its supply and demand work.
Right, so there can only ever be 21 million bitcoins. That built-in scarcity is a big deal. And it's different from, say, stocks where company performance or, the economy can affect how much is out there. With Bitcoin, it's fixed mathematically.
Like digital gold in that way.
Exactly. So that limited supply, it makes demand even more important. The more people want it and there's only so much, well, the price goes up. And we're seeing a few things that could really boost that demand.
Like when Bitcoin ETFs got approved in 2024, the article talked about that being a big turning point.
Definitely. It changed the game for institutional investors. Before ETFs, getting into Bitcoin was complicated. You needed to know a lot or use specific platforms. But ETFs, they made it simple. Now, institutions, pension funds, even regular people, they can get exposure to Bitcoin without actually having to hold it directly.
That's like everyone could suddenly get in on it.
Yeah, it's easier to access, so more people are investing, and that drives up demand, which affects the price.
And then there's government policies to think about. The article mentions President Trump, how his pro-crypto stance could lead to some good regulations for Bitcoin, which could make it even more attractive.
It could happen, yeah. We've already seen El Salvador make Bitcoin their official currency. Other countries are looking into it. If big economies get on board with crypto-friendly policies, it could really push mainstream adoption and make investors feel more confident.
So it's more than just the technology. It's about the rules around it, how governments decide to handle this whole new asset class.
Exactly. Predicting what'll happen with regulation is hard, but this investor seems to think that things are moving in a direction that's good for Bitcoin.
But $1 million Bitcoin by 2030, some people might still say, come on, is that realistic? What makes him so optimistic?
Well, remember, he's in it for the long haul. He's not trying to get rich quick. He's looking at Bitcoin growing over the next 10 years. And he's not just guessing. He's basing it on how supply and demand work, how the tech is developing, and he thinks the regulations are going to get better.
He's even using Bitcoin to plan for his son's college. It mentions that in the article. That's a pretty big statement, putting his money where his mouth is.
For sure. It shows this isn't just theoretical for him. He's putting his family's savings into Bitcoin, at least some of it.
It's pretty cool how being a dad is influencing his investment strategy. It's like he's connecting traditional finance with this new world of digital assets, not just for himself, but for his kids, the next generation.
And that brings us back to how different generations see value. This isn't just a story about Bitcoin. It's about how we define value, how it's changing as technology changes the world around us.
Makes you wonder, is there something to this? Could this, generational shift actually be changing the whole financial landscape?
Yeah.
More than we realize.
It's definitely a thought-provoking idea. It makes us question what we think we know about value, right?
Mm-hmm.
We've always thought of tangible assets like gold, real estate, as the foundation of wealth. For centuries, that's how it's been. But what if that's changing?
Yeah.
What if younger people, because they grew up in a digital world, see value in things that, maybe we don't fully get yet?
It's a whole different way of thinking about wealth, how we define it, measure it. And this investor, he's kind of a bridge between those two worlds.
Absolutely. It shows how important it is to stay curious, to be open, even to ideas that seem a little strange at first. Who knows? Maybe those predictions about Bitcoin hitting crazy high prices, maybe they're not so crazy after all.
It's kind of wild to think about something that came from, the internet could actually change the entire financial system.
Yeah, it shakes up everything we thought we knew about value. But disruption can be good, right? It often leads to new things, progress. Think about the internet, smartphones. At first they were just fads, toys, but look at them now. They've completely changed everything. Crypto could be the same.
It's true. The world's always changing, and so is what we consider valuable.
So think about this as you go about your day. What are you missing out on? What new ideas, technologies are you overlooking that maybe the next generation sees as the future?
Yeah, maybe we all need to question our assumptions a bit. Be more like kids, curious about the unknown. Because like we've seen in this deep dive, sometimes the most interesting things come from the places you'd least expect.
And remember, this investor, he didn't just go all in on Bitcoin. He kept a mix of traditional and new stuff. Maybe finding that balance between the familiar and the unknown, that's the key to navigating this crazy, unpredictable world of finance.
That's a good point. Well, thanks for joining us on this deep dive. Until next time, keep exploring, keep asking questions, and be open to whatever's coming next.